right? Okay, so wages would be set to 10% of sales and 20% of sales. Then we'll have to model the effect on the operating activities only. What do you mean by model, guys? So we are going to see the changes, what will happen on the cash flow statement, yes, in the operating activities, right? So then,
wait, so would only the wages change?
yes,
so only the wages change. So everything else just be the same. Except
everything will be the same. Yeah. Okay. Shall we do it? Okay. Firstly, we'll have to repeat the same things as we've been doing. Right. Cash sales, GST received.
We're just saying, do we have to write inflows and outflows?
Yes.
Oh, so we have to write them.
Yes. All of them we had to write it.
No, like you have to write the word inflows and then list it.
Inflows. It's up to you guys. It is not a big deal. Usually the practice is, if you see the textbook, right, they will put the inflows and outflows only in the operations. They wouldn't put it in the other activities, right?
Yeah,
For example, investing and financing. Why? Because there are not many, yes, few. In the operating activities, we can see it in the in the textbook. But whether you write inflows or outflow, you wouldn't get any mark, or you wouldn't lose any marks. It doesn't make any change. It is good for your focus, right? That you are not going to include any. You are not going to when you are simplifying, you are not going to add any outflows, or you are not going to subtract any inflows. Make sense? Yep. Cash sales. Only for March, okay? We are doing it only for March. 36,000 wages. Sorry, cash sales. Also 36,000 on the other side. GST received. 10% of that. Right. Then next one is receipts from accounts receivable. Right, they are the same. 25,729. Yes. Okay, guys. Then please add the inflows.
Do we have to do that?
In this case, let's do it. And please write the outflows. Right, outflows are, guys. Firstly, we'll start with wages. How much is going to be wages?
3,600.
3,600. Yes. Right, 3,600.
Is it all sales or just cash bills.
Yeah, it doesn't say we'll consider only cashiers, because what we can see in the cash flow statement is only cashiers, so we'll consider only cashiers, right? 3600, and the other one is going to be how much? 7200. Yes. The next one, guys, same thing, payments to accounts payable. Is 14,850, and sorry, please put this within brackets, the payments. Then we have advertising 2,500, and GST paid 250. Right, let's add the total outflows, guys. 0, 0, 15, 22, 9, 2, 11, 21, 200. Since I'm getting 24,800 as a result, the overall, the net cash flows from operations is going to be yep. What I have put in the green is the operating net cash flows from operations, right? Any questions, guys? Okay guys, we are done with the tube. We are starting the next part of the budgeting, variance reports.
Thank you.
Welcome.
What chapter is this?
Chapter number in the textbook, yes?
The accountant.
I think it's 18.
But do the tube numbers correlate to the chapters?
No. Okay, for online students, I'll send you the tube guys. Yeah, for Arun and Punara, I sent you the tube. No, I just emailed you, not on the Google one, okay? Right. Okay guys, let's start the variance report. Right. Now what is this variance report? Now do you remember the budgeting process we did at the beginning? Yep. Anybody remembers the budgeting process? How many steps were there? 4? There were 4, yes? This is the budgeting process. What is it? We were preparing the budgeted reports, that's what we've been doing, right? But we haven't done like full reports, guys. We've been doing only cash flow statement. We had to do next one income statement, right? And then now we are doing we had to do the variance report for both cash flow and income statement, and then final part is decision making, which is mainly theory. So 1, 2, 3, they are basically working out, preparing the reports, and then finally we make decisions, theory. Okay. Then how to overcome the problems and improve the performance in the future. And then guys, after that we are going to do all 3 reports together. Remember, we have done cash flow, income and balance sheet together. Yes? Like that we are going to do it for budgeted. And please note, they are coming to the VCE as well. In VCE, right, minimum 18% is coming to VCE final exam on budgeting.
Like 18% of the exam?
Yes. Yes. Sometimes it can go to 20% as well. So minimum 17 to 18 comes to the exam. Okay, so this is important, guys. Right. Now, shall we do this one? Variance report. Okay guys, let's start. Variance. Okay guys, let's do the notes. Variance report is an accounting report that compares actual and budgeted figures, highlighting differences so that problems can be identified and corrective actions taken. Right? So there are two variance reports, guys. Cash flow and income statements only. So you can ask me what about balance sheet. We don't do the variance report for balance sheet, okay? It's not really useful. So we don't do balance sheet variance report. Right. Now guys, we'll do the other one, variance. The difference between actual and budgeted figures usually described as favorable or unfavorable. Variances can be due to poor budgeting, however, there are uses of it as follows, right? So uses of variance reports. Number one, helps in planning the next budget so that it is more accurate. Next one, aids in decision making. The unfavorable variances should be investigated and their causes identified. This will allow the owner to take corrective action. Okay guys, please read it. I'll explain. Read. Okay, online, somebody who hasn't got the tute, I shared you in the chat as well. Right. Okay, guys. Any questions with this? Yeah. Variance. What do you mean by variance? Sash, don't worry doing it. I didn't ask you to do it. Okay? Oh, that's fine if you want, you can do it, right? Variance. What is the variance, guys? Difference, yes. The difference, actual and budgeted, yes. So, for example, remember, I always tell you about marks. So, let's say when you go to the SAC, you thought of getting some mark, maybe 80% or 90%, and then you compare it with the actual, yes, right? So, let's say you thought of getting 80%, but you got 90%. That means it is favorable variance, yes, by how much? 10%. Then, and also an opposite, right? So then, variances can be, guys, usually 2. If it is the same thing, actual is equal to budgeted, then sorry, accurate.
All the differences
Zero, no difference. Yes, it's the same thing, no difference. Okay, guys.
But
Then
is that favorable or unfavorable?
neither. Why? Because it's the same.
So it's right off.
Yeah, neutral. Yeah. So basically, guys, variances are usually, we say that due to poor budgeting. So then we assume that it is something wrong with the budgeting. So then we claim it for poor budgeting. However, there can be other reasons as well, but we don't really care about it. Right? Then what are the uses of the variance reports, guys? Again, it will help us planning. How would it help us planning? Because we have already planned it, which is the budgeted. Then how would it help us in planning? In the future budgeting, right? Future budgeting, then we can do it more accurately, yeah, better, right? If we had done some mistakes in budgeting, right? Usually what happens is, guys, in budgeting, we will always do favorable budgeting for inflows, yes, inflows and revenues. And then sometimes the other way is unfavorable for the outflows or expenses. But usually we will exaggerate the revenues usually, yes, right? Positives, revenues or inflows we will exaggerate. Other things, can be sometimes can be more accurate, or sometimes we might understate, right, expenses. Okay. Then guys, also it will help us in decision making. How would it help us in decision making? So let's say in your SAC mark, you got low marks, then you can, what can you do? Basically in the future, you can study, you can fix your problems, yes? Maybe if you are bad at theory, then you can fix it, right? And then you can make use for it, future decision making, right? To make corrective actions, okay? Right. Then basically that's it, guys, for the theory. Right? Then we'll do the questions. Any questions? Okay. Right. Question number 1. Right. What is it? Did you read the question? You want to read it? No? Yeah. What is happening? Now this question actually I gave you a little bit different, right? What do you mean by different? In my all the other questions, how did I give it to you? How did I structure the questions? I firstly give you the set of questions and then give you the answering space, yes, templates. But this one I did differently. The reason is, guys, because had I done it that way, I would have given this question thing 2 times. Right? No point, yes. I give this one in the question, and also I had to give that again, print it in the answers. You know what I mean? No? So same thing I've had to give in the question and also in the answering part. Otherwise, how would you do the variance? Make sense? Yep.
Like we have to make the cash flow.
Yes, yeah. Basically, then you'll have to again, write this budgeted and actual again for you to do the variance. Yeah. So no point. That's why I did it. Okay. So then, guys, what is this question? Bold here. Sales hair care. Wonderful. Yes. Yeah, we can see their hair caring. Yes. All right. In Melbourne, and has provided the following cash flow statement for the year ended 30th June 26, right? And then business had organized an overdraft limit with the bank 6,000, right? Required. Explain one benefit of preparing a cash flow statement variance report. If you want, we can answer that late as well. I mean, having done part B. Otherwise, we can answer straight away. Shall we answer it now or later? Yeah? Later?
What was the question?
Yeah, my question is, shall we do the part A now or later?
No.
Now. Easy, okay. Okay, guys. Explain one benefit of preparing the cash flow statement, variance report. What is the benefit? I already discussed. I explained 2, yes. What are those? Yes, well, which is, it will help us in accuracy in planning. Good. The other one? Decision making. Right? Which one you want to write? Decision making. Okay, guys. Now, this one I will do with you. Right? We'll do it together. The other ones you guys have to do it. Agree? Agree? Huh? Yeah. Okay. Including theory, though. Okay. Why not? Because you will get theory as well in the exam. Right? 1/3 of the content paper is theory. Yes. Okay. Right. Now, cash flow statement, variance report. Okay, now have a look. Now, right. Now, how do we get the variance, guys? Is it actual takeaway budgeted or budget takeaway actual?
Budget takeaway actual.
Budget takeaway actual. Okay. Right. Either way, it's the same thing. But when you are going to figure out the variance, then you have to be careful. I'll tell you. I'll show it to you. Okay. Now look. Receipts from accounts receivable. What's the difference or the variance?
1,000.
10,000. Right. Yes. 10,000. Right. Okay. Now the thing. Is it favorable? Is it good or bad? Good.
Wait, sorry,
Bad.
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 Or should be actual minus budget.
It'll be budget minus.
Okay. Actually, yeah, it is a good point. It's both.
Oh.
But it depends with the whether the item is positive or negative.
The context.
Ah, yes, in the
If
context.
we do actual minus budgeted, if it's negative, it would be unfavorable.
Yeah.
Positive would be favorable.
Yes.
That would be easier.
Yes. Yeah, but the thing, when it comes to expenses, it will be the opposite.
Yeah.
Right? So in the context, as you said, right, it will be different. So that you have to be, but don't use kind of short and sweet method, but rather than that, be mindful. That's what I do. I don't have like hard and fast rule. This is that minus this, so that it's good or bad. No, I don't do like that. We'll see why it is, in the future. Right? Okay, now I'll do. So then budgeted takeaway actual or actual takeaway budgeted, either way 10,000. Now in this case we are not going to put minus plus, no. Nothing like that. Plus minus, no, okay? That's in maths. Okay? Minus 10,000 plus 10,000, that's in maths, okay? We will say it's good or bad, that's it. Right. We budgeted receipts from accounts receivable 99K, but we received 10,000 less. That means, what is it? Unfavorable. You can just write UN. But remember guys, if you are going to use acronyms, you have to predefine, okay, in the exam. Make sense? Predefine means what? Like I would say, yeah, you have to write a note. Basically, somewhere it has space. This one doesn't have space, guys. So you can put asterisk and un means unfavorable.
Is that
Like that.
acceptable with them?
Sorry?
Do they allow that?
Yeah, of course. You can use any acronym as long as you predefine.
So could you be like AR equals accounts receivable?
Yeah. But you have to predefine. Then examiner should know what you are referring to. What you refer AR to. Yeah, otherwise we don't know. Okay, guys. Right? Now, then this is okay. 10,000 unfavorable. Yes. Cash sales
9,000 favorable.
9,000 favorable. Why is it?
We made more money than expected.
We received more. Yes, good. GST received
Unfavorable.
favorable. Good. Right. Payments to accounts payable 21,000. Very good.
Unfavorable.
Unfavorable. Why is that?
Paying more money.
We paid more money, yes, than we budgeted. We budgeted 115K, but we ended up in paying 136. So it's unfavorable. Yes, our cash has gone out more than we anticipated. Right. Prepaid rent 3,000 unfavorable. Very good. GST paid
Unfavorable.
unfavorable 150. Wages.
4,000 favorable.
4,000 favorable. Why, Christian?
You're paying less.
We paid less. Very good. So we have saved our wages, yes? Maybe we exploited labor.
Oh, that's right.
No, I'm kidding, okay? Yeah. What is it, sorry?
That's why it's in backwards.
Yeah, backward. Yeah, that's the thing. That's backward. Now see, that's correct. Wages, right? We get the difference, okay. But the thing is, now which is opposite to the cash sales. No, the other way, yes. Sorry, receipts from accounts receivable, yeah. Okay, so like that, guys, I'm not going to give you any hard and fast rule. I have never given in this case. Actually, rather than that, I want you to understand it. I'll tell you why it is in the future. Okay? All right? So, advertising. 1,500. Good, bad? Good.
Favorable.
Favorable. Why?
You save money on that.
Why is it, Sash? We are paying less than budgeted. Good. Interest 400 on GST 900. Yes, Aston?
Unfavorable.
And why?
Because you're paying more than what
We paid more. Very good. Net cash flows from operations.
How would you do that?
Yes. How would you do
can't
that?
add them all up.
Yeah, you don't have to add them all up.
And you
Yeah,
can't give
yeah,
them-
you can add. If you want, you can add. How?
We can't give them a negative value.
Yeah, you can do.
You can give it
Yeah,
negative
basically favorable, you can say positive.
value.
Alright?
Oh, yeah.
Yeah?
It's unfavorable
It's unfavorable. Why is that, Harry?
because you're making less money.
Less money. Because we thought that we would make 25k, but we ended up 5, yeah? Okay, so then the difference is, guys, 50, 0, 20,050? Yeah. Good or bad? Yeah, unfavorable. Now see, now this is after that, yeah?
So then what about, so if you add all the favorable things and subtract all the
Then yes, then basically unfavorable will be higher, yes? By 20,050. Yeah? Okay, and also the other one. Now see, look at this. Everyone, Aston, Christian, look at this. Now, manager or the accountant or the owner, whoever, wants to analyze this one. Now, operation, when they see that, my goodness, what has happened here? 20,000, they are off, yes, they are very bad. Then, the owner or accountant or whoever, what can they do? Now see, this is 20,000 negative, guys. Then, they can look for the reasons for that. Now you guys can tell me what reasons are those? Aston, are you following me?
Yeah.
Yeah, what are the reasons for that?
Probably paid more than what they expected, or they made less than what they expected.
Yeah, for what?
The reason why there's a difference.
No, that means you are not following. Yeah, what is the answer, guys? Follow it, Alison. Accounts payable. I'm asking why we made this negative. You are doing calculate. Okay, listen. 20,000, right? Why? See, we have a big unfavorable at 21,000 itself. Accounts payable, bad. Then also, accounts receivable. Then what are the things that you can do for accounts receivable, guys? Sorry? Hire an accounts receivable officer. Send reminders. Very good. Prompt invoicing.
Maybe do like budget less. Could you like maybe just do
Yes. Yeah, exactly. If it is something wrong with the budgeting, yes. Now that they are the jobs of the accountant, right? So then accountants, that's why they are busy. Then they have to look for the reasons.
What can we say for the accounts payable?
Accounts payable, because then that also they have to see the reasons. Why they have overpaid for that. Maybe a few reasons. One thing is the inventory prices have gone up. so that we ended up in paying more, right? Then otherwise, because we were like kind of what do you call? We were kind of
You paid late, so you didn't receive discount.
yes, probably we wanted to get, we were greedy in making discounts, yes, so that we paid faster, right? Yeah, like that, right? Those are otherwise maybe, right? Now we can see, guys, cash sales has increased. See, cash sales almost 10%. It has increased. Maybe we have increased sales so that we purchase more. Yeah, we don't know, right? So we have to look for that. That's why in businesses, if it is a big business, there is a financial accountant and also a management accountant. Our management accountant will do these things. I have worked as a management accountant in a construction company. These are things that we do. We help the owner to make decisions, right? Right? So then they can like basically we will recommend whether they make decisions or not. It's up to them. We are doing our job. We give recommendations, right? Okay, guys. Now these are the things. So I'm telling you because why? You will get, if you get a question, then you know how to deal with that. Yep. Okay, guys. Now shall we do the other ones? Right. Okay. Proceeds on sale of equipment. Yeah. Good, bad. Bad. Why is that?
We expected to sell it more.
Yes. So we got only. We received less on shelving. 12,000 is bad. Yes, because why? We have to consider this one as 0. Yes, we didn't budget, so that means technically it was 0, and 0 take away 12,000. So basically unfavorable, right? Then net cash flows from investing activities. This is interesting. Have a look. Right, net cash flows from investing activities. 14,000. Oh, really?
Yeah.
Okay, 14,000. Yes, Ash? 14,000. Yes? Very good. All of you are good at nuts. Right? Better than me. Right? 14,000. Then, what is the reason? Unfavorable. Right? This is unfavorable. Why? Because we projected 5,000 positive, but it became 9,000 negative. So 5,000 to 0, we are dropping, and again further we are dropping another 9,000. Yeah. So unfavorable. Next one, guys, capital contribution 20,000. Good. Unfavorable. Favorable. Wonderful. Any others? Yes, Sash? Favorable.
Is there a notepad at the front?
Notepad here.
Yeah.
That's one. I'll take it. Yeah. 20,000. Yes. Alston.
Which one?
This one, 20,000. Where are you?
That's favorable.
Favorable. Are you change it now? Okay.
That's favorable.
Favorable. Okay. Yeah, favorable. Correct. Yeah, it's favorable. Yes. Why? Because it is positive. Opposite of the shelving thing. Yes. Good. Favorable. Yep. Loan.
Isn't it bad for the owner?
Yeah, that's good. Bad for the owner. Yes. Yes, Christian.
We're not looking at the owner.
We don't care about the owner. Right? Yeah. So we don't worry about the owner. Yes. Whatever it happens to owner, none of our business. Yes. Right? Our business always. Yeah, that's a good point, Harry. You have to always think from the business's perspective. Imagine you are the business. That's what I did when I was at your level, right? I thought I'm the business, then owner and others are outside. Yep. Okay. Now loan. 5,000. Favorable. Interesting. Favorable?
Favorable.
Why, Aston?
Because they paid less than what they expected.
Yes.
They didn't pay anything.
Yes, they projected
They
a
paid
payment
5,000.
of 5,000, but they didn't make it. So favorable, yeah. Drawings, 4,000. Unfavorable, yep. Then net cash flows from financing activities, 20.
21,000.
Yes. What is it, Christian? Favorable.
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 Why, Sash?
Because you thought you would lose 41,000, but you actually only lost 2,000.
Wonderful, very good. I like that. So basically, that's how you have to go through the logic, guys, right? Net increase in cash position, good or bad?
Unfavorable.
Unfavorable. Okay, unfavorable. So then let's calculate 50, 0, 13,050. Unfavorable. Yes, yes.
What's unfavorable?
How is it unfavorable? Think. Similar to the previous one. I mean, similar is opposite, actually, opposite, yeah? Yeah, so we thought that we would lose 10.5K, but we lost 23.5K, yes? So unfavorable. We lost more than what we anticipated, unfavorable. Then guys, bank balance are 0. Good or bad?
Neutral.
Neither. You don't have to worry about it.
You just do
Sorry?
You don't write anything.
You don't have to worry about it.
You can't really do anything about it.
Yeah.
You leave it blank or do we do a dash?
Yeah, it's up to you. Even though you draw it or doesn't draw it, doesn't matter. Right? Yeah. I just put it. Then guys, bank balance at the end.
13,050.
50.
Unfavorable.
Unfavorable. Because of what? Because of the net increase, yeah? Because the bank balance was the same, and then at the end it is unfavorable. Right. Okay, online students, any questions? You guys have any questions? Right. Then shall we do the theory, guys? Right. Okay. We'll do the theory then, guys. Firstly, part C. State whether. Yep. State whether variance in payments to accounts payable is good or bad. Justify your answer.
It's unfavorable. It's unfavorable because we paid more than expected.
We paid more than expected. Yes, correct. Okay, shall I write it, guys? Or you are okay? Right, part D. Suggest one reason for capital contribution.
Because of large extra payments to accounts payable.
Because of
Extra payments to accounts payable.
accounts payable. Anything else?
Because like it helps reach like the overall like, goal for the net cash flows from operations.
Sorry, come again, Harry?
Because we made 20, like we expected to make 25K for cash flows from operations,
Yep.
but you didn't make like, but you needed 20K.
Hmm.
So like to help the business like meet its budgeted price,
Yep.
we're gonna contribute 20K.
Yep. Anything else?
Payments to accounts payable.
Yeah, payments to accounts payable. Yes, he said that. What else?
Also like she lost 12,000.
12,000 on shelving. Yes. That I would write in the exam. What else?
2,000.
Sorry?
2,000 on sale of equipment.
Sale of no. Why? Because that. But anyway, that was a receipt. I mean, that was a drop in the receipt. But no, I don't think the owner would contribute that for that. What else, guys? All right. Now I'll show you. I'll bring your attention, right, to this one. What is it? What was the bank overdraft, guys? Yes, bank overdraft. See, these are the information that you have to be careful in the exam. Right? That's why you need to read. Yeah, that's why you need to read, and also you should be good at reading. Right? Now you guys read books. Yeah. Yeah, you can read when you finish VC. Yeah. Right, too late. Yeah. Why would I ask you to read books? To practice, to train your basically brain in reading. Why? Because like when I give like questions, some students in 3-4, they always complain. Lot of text. They say lot of text. Yeah, like sometimes budgeting questions I show you. Budgeting questions, guys, you have read like one whole page, right? So you should be good at reading. A lot of information. Okay, so that's why. Otherwise, I don't care because you guys are, including myself. Now, what has happened? Right? We are very used to the screen. Yeah, screen addiction. So then we are just watching. That's it. We don't use our brain. We just use our eyes. That's it. Reading more than that. Okay. However, guys, you have to have a habit of reading. In my case, I read every day. Okay. Now, suggest one possible reason. Yeah, I would write it. What is it? The correct answer is what is it? Because now what is our bank balance, guys? Bank balance is 15,000. Yes, right? I mean the actual one. Actual one has become 15,000. Right? That's why the owner had to contribute money, even though it was not budgeted. Right? The owner had to contribute money. Yes. As the bank overdraft. Exceeded the limit. 6,000. Okay. Next one, guys. Explain the effect on the actual closing bank balance because of the variance in investing activities. Yep. What has happened, guys? Because of the investing activities? Yeah? Tell me.
They decreased by 14,000.
Sorry?
They decreased by 14,000.
14,000. You sure? Not 9,000?
Invested.
Yeah. Not 9,000, not this one?
Oh no, I mean the total variance is like 14,000 more than I expected.
14,000 has dropped. Okay. Any other answers?
Wait, you say the question again?
Yeah?
You said it.
Yeah. You are correct, Aston. Right? What has happened, guys? See? It is 14,000, yes? Because of the actual situation in the investing activities is, what is it? What is the impact of that one on the actual bank balance? That's what they're asking, yes? What is the impact of the investing activities on the actual bank, on the actual one, what happened? 14,000 drop. Why? Because we lost 2,000 in our sale and also we had to purchase a new one. So then altogether how much? 14k we basically the impact on the closing bank and the actual closing bank balance because of investing is that we have lost 14. Yeah.
Can you tell me what's shelving?
Shelving is like, yeah, maybe, yeah, you are correct. Curtains, like basically something that you are kind of fitting.
Just checking.
Yeah, like maybe like like think about in the supermarket like aisles.
Yeah, I get
And
it.
what do you call them? Racks or what do you? I don't
Isn't
know.
that called fixtures and fittings?
Yeah, fittings like that.
Oh, so you can call it shelvings and fittings. Okay.
Lighting, yeah. But lighting is not a shelving. Lighting is a fitting. Yeah, lighting is a fitting.
So it's fixtures and fittings.
Shelving
and
is like
shelving.
imagine the supermarket like they
Yeah,
have
the actual shelves.
shelves.
Oh.
That those aisles thing that what do you call racks? So do you
Yeah,
call
shelves.
racks? Yeah, shelves. Yeah.
And the sliding go into utilities?
Sorry.
The sliding go into utilities?
Lighting. I mean, electricity expense or the electricity bill is utility expense, but actual light. This see this light fitting. Yeah, that one is fittings. Anything that you have fitted sash is a fitting thing. Yeah, as he said, like curtains. You tell me, I don't know. Those things are fitting.
Like the plugs.
Yeah, plugs. Those ones. Okay, guys.
What about like these tables and chairs?
No, they are furniture. Furniture. Okay. All right. I hope online guys don't have any questions. Yeah, nothing. Right. So I'll give the answer here. The actual bank balance has decreased by 14,000 due to purchase shelving 12,000, which was not budgeted, and loss of 2,000 in the sale of I think it was equipment, yes, as I remember. Equipment. Yep. Yep. Equipment, okay. Right. Okay, guys. Now I just realized something that I think I didn't explain it to you. What do you mean by proceeds? Have I explained this part to you before? Proceeds? Anybody know proceeds?
How much you earn from those?
Earn from that one? No. You are on the correct track, but not earn. What is it? Proceeds, guys?
The cash made.
Yeah, the cash you received. Right? Sale proceeds means, sometimes we call sales for sale proceeds. Proceeds means basically money you receive. Right? Proceeds means what? Cash you receive. Okay? Okay, guys, next one. Assess the cash performance of Bold Air for the year ended. Yeah, we'll do it now. Right. Now, by looking at this one, guys, okay? If you imagine you are the accountant, right? Right? Or you work in the accounting department, finance department, right? If you look at this one, what would you say about this business cash performance?
Bad.
Sorry?
It's bad.
Bad.
Yes,
Bad.
Unfavorable.
Unfavorable. Same thing, yeah? Question?
Bad.
Bad. Why?
Because they're making a loss. Oh,
They're making less than budgeted.
Less than budgeted.
And they've gone over their overdraft limit.
They have gone well about well beyond their overdraft limit. What else?
capital contribution.
Capital contribution. Okay.
They have more expenses than revenues.
Yeah. No, we don't have expenses and revenues in the cash flow.
Well, I mean,
That's true.
they have more outflows than inflows.
Yes, that's all. We can't say revenues and expenses in cash flow. Why?
Would that also be correct to say that
No.
there's no contribution?
Wrong. If you say revenues and expenses in the cash flow, we can calculate the profit also in the cash flow statement. Do we have profit? No. That's why we did the difference between cash and profit. Yes? Why are they different, Aston?
Hmm?
Why is cash and profit are different?
Because cash is the money that the business actually.
What are the reasons? How many reasons are there?
4.
4?
2.
No.
And 4.
Yeah, actually the average of those two.
Huh?
Average of those two. 4 and 2.
What?
Average of 4 and 2.
Oh, 3. Oh.
Yeah, 3. What are the reasons?
Some cash transactions don't affect profit. Some profit transactions don't affect cash. That's not the word, right wording.
Yeah, that's correct.
And some transactions affect both cash and profit,
But
aren't revenues.
by different amounts.
Oh yeah.
Okay, so you guys have to read the notes. Okay, right now see, I have made you a, what is it? I have made it simplified, guys. Remember, once I told you, yeah, I read the textbooks for you. I read two textbooks for you. Right, I have prepared you this here. Right. Right. So then, why? To make it simple for you, then you have to get the maximum of it. Right? So you have to read it. You have to read it, okay? Don't expect your family members to read it, okay? You have to read it. Don't expect your siblings or parents to read it. Yeah, right? Okay, guys. And then, basically it is bad. Why is it bad? Now this is the thing. Mainly, guys, I don't really care about the investing and financing. Okay, I don't have much concerns about that, right? So if you think about the investing, yes, we have 14,000 unfavorable, that's fine. But mainly why? Christian, you okay? Right? Mainly why? Right? Because of the lean against the chair. Otherwise, you 14 is weak. This one is not good. Yeah. Take out your hand here like this. Now, right, the mainly investing activities why it became 14,000 is because there was an unexpected, right? Unexpected purchase of non-current asset. So that's fine. Okay. The other one is, guys, so anyway it was funded by the owner, no problem. The other one, the financing is only 4,000 unfavorable, right? 4,000 unfavorable. So, I'm sorry, 21,000 favorable. Yes, so that's also okay, right? This is not really okay, but I'll say why it is not okay, but it's fine. Right? Let's leave it. But the problem is, guys, this one, right? This is the main headache. What is the headache? Our operating activities is negative cash flow outcome. Why? Why do we worry about the operations? Because, guys, remember, in a business, operations is the main mechanism, main main actually activity or main mechanism, main tool that generates cash, right? That generates cash. Then if the cash flow from operations itself is bad, then it's not a good business. Why? Because the main mechanism of the business that generates cash is also very weak, that it creates a negative cash flow. It's not going to be really healthy for the business's future. Why? Right? Fine. Because usually, guys, operations should be funding the other activities. Yes, operations should be positive so that we can pay off our loans, right? If the owner is doing the business for full time, he doesn't have any, he doesn't have time to do a job, like me. I don't have any other job. I'm a full-time tutor, right? So then, if I don't make enough money from this one, big problem is, right? So then, how can I pay my bills, right? So then, guys, basically, cash flows from operating activities should be positive. Okay, right? So then, if I have taken a loan, if it was my business, if I have taken a loan, then I should be able to pay off the loan, right, the principal amount, and maybe, I should be withdrawing some money, right, for my personal expenses, right? Then how can we do it if the operating activity itself is negative? And remember, I told you, financing there's a problem, yes? You guys can say, that's favorable, no problem, don't worry. But why is it favorable, guys? Yeah? Why it is favorable is capital contribution. Capital one had to contribute 20,000, right? And also, there was a loan repayment that we deferred. What do you mean by deferred? Sorry? We didn't pay, we delayed it probably, right? See, 5,000 we projected, but we didn't pay because why? How can we pay? Our bank balance is still negative, right? So then, guys, what is it? Then that's the issue, yes? So owner can't be contributing capital forever. Owner has started the business for him or her to make money, but instead owner is funding the business to run. What is that? What kind of a
The
business
owner
it
did
is?
take a lot of cash though.
Yeah, that's the thing. That's for 1 year. Let's say, as I said, right? If the owner is doing his business full time, right, and he doesn't have time to do a job desk, then he should be withdrawing money for himself. Yeah, you are correct. It's a big amount, but he has to be very serious. He has to survive.
20,000. That's good.
Yeah.
20,000.
Yes. Okay, guys. Okay, that's my basically analysis.
Wait, does it say what the consequences are if they exceed the limit?
Yeah. Basically, consequences will be, I mean, we can't exceed the limit, right? Even we have said 6,000, but we can't exceed the limit. Why? Because you know what happens these cases. Like, what is overdraft? Overdraft is a short-term loan. So owner has taken a short-term loan, right? And if the owner is going to use any further than that, bank will cancel the payment. So the business or whoever, we can't go beyond the overdraft. Why? Bank will simply cancel it. Right? You guys have bank accounts? Can you go minus? Yes? Yeah?
No idea.
Yeah.
Any?
You can go like, probably. Yeah, in my account I can go about like -100. But if there are more payments after that, then it will be basically decline. Now there are direct debit payments, right? Then they will be basically decline.
It shouldn't go below 0.
Yeah, usually, technically you can't go below 0, but sometimes bank will allow, okay? And then, but more than 100 in my account, I don't know others, can't go more than that.
For example, like, let's say you have like a gym membership,
Yeah.
so they're deducting like $15 a month.
Yeah.
If it keeps going, will it just keep going up to the negative?
Yeah, that's the thing. So it will keep on going negative up to a limit. In my personal experience is like it will go about 100. After that, it doesn't go -100. That's it. Doesn't go. But because I do a lot of transaction, but for you guys, maybe even lower than that. Right? Has it happened to you? Yeah, go negative. How much is the the highest negative?
47.
40. Yeah, that's the thing. See, -47. So up to 50, yeah, you guys can go. But
I've seen like -650-ish.
negative? No.
I've seen that.
Where? Is it in savings account or current account?
Card account.
Sorry?
It was in a card account.
Current account. Yeah, current account you can.
I think it was in
Or business account. Is it a business account?
I think it was personal debit account or something.
Yeah, if it is like a current account, you can.
What's a current account?
Current account means basically where you issue checks, but now we don't have checks, right? Now we have basically, EFT transaction. We don't have checks anymore. So current account means basically, now we have business accounts, right? Business accounts you can have negative, as long as the owner has arranged an order. Otherwise, no. Bank will straight away reject it. Okay, guys? Right. Shall I give you the answers for this one? Take it down. We received some cash shares, yes, positive. I think 9,000 in my memory, right? For cash shares, variance is 9,000, yeah? However, receipts. Okay, receipts from accounts receivable was 10,000 bad debts, and accounts payable 21,000 as I remember. See, when you, that's what what happens, guys. When you practice the question, when you do once, you'll remember the information, key information. You'll remember easily. This one would be 4 marks. Was it 9,000 as I remember?
From what?
The exceed of the budget bank.
No, 6,000.
You sure? By how much it exceeded?
Oh, how much exceeded?
let's check my memory. Whether the younger people's memory or older people's memory is better. How much is it?
9,090.
9,090. Yeah, so I'm correct. Yeah.
I'll take the remaining 90.
Yeah, 9,090 was how much it exceeded the limit. Yes. How much was the actual balance, guys? This one. 15,090, right? Bank balance negative, but limit is how much? 6,000. Yes. So that means they have gone 9,000 beyond the limit. Yeah, 90. Yeah, that's fine. If you only have it right in 9,090. I was doing everything by memory, guys. See, I didn't look at the question. Yeah? I didn't look at the question. Okay. So that's what happens when you practice, guys, questions. Eventually your brain, that's what I say, train the brain. Basically when you do it once, when you look at the question, and even if you ask me some information from the question, I can tell you. That's because I haven't memorized, but when I do a question, basically I have a good memory about the question. Okay. Part G, guys. Identify two assets that will, same thing will happen to you. Okay, if you practice, you have to practice the same question few times. Identify two assets that will differ by the end of the year as a consequence of the variance in the cash flow statement variance report. What are the assets that will change? How many assets? I can tell you straight away. What are the assets? Tell me. This is from accounts receivable, cash sales, GST. What else? GST will be not an asset.
All assets.
Not be an asset. Accounts payable also not an asset. Accounts receivable correct. What else, guys? What are the things that we had variances? Big variances.
Shelving?
Shelving, yes,
That
correct.
won't be there.
Yeah, bank balance.
The sale of an asset.
Yes.
That won't be there.
But that was anyway, so we sold it. That finally it will impact the bank balance. So whatever like we had. So what you are saying is, we had we sold office equipment, yes, right? Office equipment we sold for 3,000, but we budgeted 5,000, correct?
Yeah. It was.
Yeah. Right. So we had budgeted for 5,000, but we sold it for 3,000. But that change will happen to what? Bank balance, not that asset. But that asset will be anyway gone.
Like the asset, the entire thing won't be there at all next.
Yes, but it won't. That's wrong. It won't change because anyway we had budgeted. What I mean, the sale of the asset was anyway budgeted. It should have been gone. Imagine the cost of the office equipment was 10,000. Okay, it was 10,000. That will be anyway gone, right? At the end of the actual period. But what is happening, or the outcome, net impact will be on the cash.
Yeah.
Make sense?
So it's what changes from the variance.
Yeah. So basically, it will affect the bank balance. Okay. All right, guys. This one is easy. What is it? You can say. Firstly, I would say bank balance.
It's just an identify, so you just have to state it, right?
Sorry.
Since this is an identify question, do we just
Yes. Yeah, we had to identify, and also that will differ. Yeah, bank balance, and we'll give a small description. Basically, bank balance. Yeah, that will. Uh, $13,050, yes. Why, guys? Because our bank balance at the end we projected 2,040, but we got 15,090. 13,050, and the other one is, what is it? Shelving. bank balance we have to say decrease. That will, rather than change, that will decrease by shelving will increase by 12,000. Right? Due to purchase, and then this one bank balance will decrease by 10,000 due to Yep, that's it for question number 1, guys. Any questions? Online guys, any questions? You guys, any questions? Yeah? Okay, you can start question number 2, please. Done? No. Okay. As I remember this question, I can't remember exactly. This is a VC question. A long time ago. 10 years ago?
10 years ago.
Yeah. Or maybe 11 years? More than 10 years, definitely. Or maybe 10 or maybe 14? Can't remember exactly. At least should be 10 years. Easy question, right?
Do they change the study design a lot?
They change not a lot. 6 years ago, when they introduced the previous, not your one, this one was introduced like last year. Before that, they introduced 2019 somewhere. Then they changed terms. Earlier we call debtors for the accounts receivable. We call creditors for the accounts payable, and we call stock for inventory. Like that, the terms we change sometimes. Yeah, and also the way we report, right? Yeah, and as a result, the way, the papers were changed as well. We compare this.
Yeah. Two questions. So the overpaid expense means they paid more.
More.
Usually. So that means this one period will be subtracted from them.
No, overpaid
Would they-
means the actual one has happened what? Actual is?
500 more.
You overpaid? Okay, what is the thing? Show. Overpaid? This one? Yeah, that means they should have paid 500 more than what they were required.
So they didn't pay. They didn't pay the 500.
No, they had paid more.
Oh, so that means they overpaid. So that means
They
this
overpaid,
period will be
yes.
subtracted, right?
Yeah.
Ah. So just be
Subtracted, that I won't tell you. You have to think. Right? So what has happened is it has been overpaid. Right? So
Yes, so
what
then-
they are saying, actually I was the one that changed this one. Yeah, this one I changed actually, because otherwise, because this is a basic question, you can't do it the way it goes further. 12,000 budget payment for the expense, That means actually they had paid it, but when they were doing budgeting, they
They
missed
consider
it.
that, yeah.
Company
So that
missed it.
means it would be, they pay less than that.
Yes. So then you have to figure it out.
Is loan repayments an expense?
Loan?
Repayment.
Yes.
It's an expense, right?
No.
No.
It's not an expense. Let me know if you are done, guys. Done?
That's just what, because if that's an expense, and what financing could affect net profit? You can't say joint is gonna affect our capital contribution.
Yeah, you have to think. So how would it affect the net profit?
It doesn't though, because
Yeah, loan, can it affect the loan? I mean, can the loan affect the net profit? It can, no?
but it's not revenue though.
Yeah, so loan will have what? Loan will have a cost base.
Yeah.
What is it? What is the cost of borrowing? What is the cost of borrowing?
Costing for borrowing.
Like whatever they charge.
Yeah, what do you call it?
Interest.
Interest. Also-
That's operating though.
What?
It's operating.
Yeah.
Does that count as financing?
No.
Because it just says what financing activity will affect
Affect?
net profit.
Yeah, that's the thing. So, loan is financing. Interest
Operating.
would not in the cash flow. Net profit. How did it affect the net profit?
Be expensive.
Yes. It will create an expense, which is
interest itself isn't an expense though.
interest.
I mean,
is
interest itself is an expense, but the loan itself isn't an expense.
Yeah, but the loan is in the financing. Read the
Does that,
question again.
yeah, but does that count? Because it's, I
Yeah,
feel like
read
it's
the
asking
question.
for individual.
Yeah, read the question.
It's in one possible effect of the financing activity on the net firm's actual net profit.
So. Does that make sense?
Yeah, it makes sense. It's just, I feel like the person's asking for an exact financing.
No, I haven't understood the question. No?
Indeed.
Yeah, don't worry about the theory. We'll do first theory. Are you going to do these ones as well? Prepaid rent?
I did that.
Oh, you haven't done
I don't think that.
it? Part A? Oh, sorry, not part A here. No, sorry, GST paid. GST paid you have to do. Prepaid rent expense you have to do here. Prepaid rent can be loan. No, it can be correct. Okay. Okay.
Wait, is that prepaid rent, right?
Receipt. Right. Yeah, I think you're correct. Okay, guys, shall we do? Right? Shall we do this one? Right. Okay. Right. Now see this one. Firstly, part A, guys. I think part A, some of you might have done incorrectly. Okay, that's a bit confusing, yeah? Right, now we'll see. Right, alpha. So they have variance report for the year ended 30th June 26, right? Now additional information, right? Actually, I changed this one because I remember I told you this was a VC question, and the way that they have made it bit even harder than this one because they had another payment at the beginning of the at the end of the period as well. But I changed it, right? So as a result, it is bit easier than the actual question. Next one. All right, this is the one. 12,000 budgeted payment. That's the part A as well. Yes. Calculate the actual payment for rent for the year ending 30th June. 12,000 budgeted payment for rent expense failed to take into account the overpayment of rent expense of 500 as at 1st July 25. What is first of all 1st July 25? Huh? What is the 1st July 25, guys? The start of the year. Very good. At the start of the year, right, when whoever did the budgeting thing, right, that person didn't consider the 500 overpayment. Meaning?
You mean the budgeting is inaccurate?
Budgeting is inaccurate. Is it overstated or understated? Understated. Right? Overstated. Now, so when by the time, at the beginning when they do the budgeting process, at the beginning of the period, that person missed 500, that there had been an overpayment, right? Advance payment for the year starting 1st July 25. 500 had been already paid, which was missed in the budgeting. That means, had that been considered at the beginning, how much do you think the budgeting be? 11,500 or 12,500? 12,500? 12,500? Okay, now understand the point, right? There had been no payment, right? Which was actual. Why? Because that is at the beginning of the year, right? So when they started, 500 had been already paid, which was missed out, right? And then the budgeting is saying 12,000 is the rent payment. But had that been considered, that 500, how much do you think the budgeting rent be? Budgeted rent be? Higher or lower? Yes?
So they're saying that the person who did the budgeting, like they didn't take into account the...
Yeah, they missed the 500 overpayment. Or that person didn't know that it was paid.
And they're saying that the 12,000 is what they're going to pay.
Yes, that should have been paid during the budgeting. Imagine like 1,000 per month, yes? 1,000 per month, 12,000. But that person forgot to consider the 500 overpayment. Then how much should have been budgeted then, initially? 11,500. 500 being low. That means how much would be the actual, guys, here? Yes? Actual will be how much? 11,500. Why? Because already 500 been paid, yes? That means they don't have to worry. I saw some of you had done 12,500. They are wrong. Okay? So then right here, budgeted 12,000 and take away overpayment. So that they don't want to pay that 500. Yep. 500, then 11,500 is the actual.
Why wouldn't it be? Because the 500 is like the first day, right? Of the new year.
Yes.
And the person who did the budgeting for the 12,000, they already they predicted the 12,000, right?
Yeah.
And then the 500 is already in the new year too.
Yeah, 500 had been already paid in the previous year.
Previous year.
Previous year in the sense like the year ending 30th June 25.
Yeah, and then the new year starts on 1st of July.
Yeah, then when we started, it had been already paid.
No, but it says it's paid on the first.
At 1st of July.
No, so yeah, paid it on the first or before that. By that date, there was an overpayment, right? Doesn't matter when it was paid, maybe 30th of June or before that or on the 1st of June, right? Regardless,
Or overpayment. Like
yeah, as at, there was an overpayment as at that day. When you jump to the new year, there was an overpayment. So then it was not cited. It wasn't shown.
Wait, why don't you just pay less for that month and then continue paying normal for the rest of the months?
Why would you pay, sorry?
So you know how there's like, you already paid $500, yeah? So when you're paying the rent, wouldn't you just pay $500, lose that 1,500, the rest of the months just pay 12,000?
No. I don't know if I got your question correct, Sash. Basically, imagine like this. Every month, right, we are paying 1,000. Okay? Now, think of something like that. Usually rent we have to pay always in advance. Okay? We have to pay in advance. Right? So, usually, right? Why? Because otherwise some people, the tenant will run away without paying money. Okay, so that the landlord always collect the money in advance, yes? Then, as a result, right, probably imagine last year it was 500, right? So then we had to always pay in advance. Then the advance payment was not considered, right? So every month you have to pay 1,000 rent. So that should have been 12,000. But the man who did the budgeting forgot that 500 overpayment, so that he said, okay, our rent payment will be 12,000. Yeah, so but didn't consider 500. Then had he considered 500, he would have said, no, only 11,500 because we have already paid that amount. Yes, but your point is also correct, right? Basically, you are saying like every year we will end up in paying that amount or something. Yes, yeah, but maybe there was a change in the thing. There was a change in the rent or something. Right. Actually, you know why I said this is easier? Because in the actual question, right, there was another prepayment at the end of this year as well. Does that make sense?
Yeah.
Yeah.
Like a prepayment.
Yeah, prepayment at the end of by 30th June 26. Let's say 1,000 should have been prepaid for the next year. Then you had to add that 1,000 here again. Does that make sense? Make sense, guys? Had to add that 1,000, right? The question said that was actually in the question. I changed the wording actually, right? There should have been a prepayment for the next year of 1,000. That means you had to add 1,000. Then actually it will be how much? 12,500. Don't worry about that one. Okay. This one, do you understand? Yeah. Okay. Okay, guys. Then is that enough, or you want us to do the rest, part B as well, or you want to do later? Okay. Okay, guys. Then thank you.